Okay, this is Mark Espy once again, and I'm from MarketTamer.com and OptionsRevolution.com, and we find ourselves Friday afternoon after market close on the 27th of August, and we're looking at the comp Q here. And before we begin, I must remind everybody this is for educational purposes only, not a recommendation to buy or sell anything. Please do your own due diligence. Okay, when you look at the Nasdaq, it gaps a lot more than the other two indexes, and I indicate that here because there are several areas where it has gapped, and that's always going to act as resistance and or support as the case may be. In this instance, we're coming back up here, and we actually ran into a little bit of a gap right here in the bottom of this little box that we had going on right here, this little itty-bitty channel, and we bumped our heads next to it, and it just couldn't make it beyond there. There's also a gap right here, It actually coincides quite nicely with this gap right here. So this area just below 2200 should provide some stout resistance on the way back up if in fact we get follow through on this. My sense is, and again we're bouncing off of this internal trend line, it is not quite as symmetrical as the other two. We didn't stop exactly at these trend lines, but pretty darn close. And as we move up, we'll encounter some of these gaps going back up, and I think the most that we could do is maybe come up here to the 2225, possibly to this gap right here at about 2250 before it begins to slow down, and that's just right underneath the 200. I really don't think it's going to challenge and come back up above the 200. If in fact it does, we're looking at this shelf, which is actually a double triple top at around 23 and change, and this swing high about 23.35. This swing high at 24.25, and then it's about 25.35 here at the top. Okay, if we break down below this internal trend line, we're going to look at, actually this lines up very nicely, by the way, with this double bottom right here. But it's just basically this is analogous to the 1044 area that we found in the SPX. So I think we need to respect that. But if it breaks down below this, we're going to go back down here, which is at 2061. My sense is, though, we are going to pop back up, but it's going to have a lot of difficulty getting past some of these gaps in other areas, and certainly it's not going to go beyond this swing high, I don't think, at around 2230, 2235, and for sure not above the 200 simple moving average. I just don't see that happening. So we could move into a bit of a trading range here, as I had mentioned before. We're in the oversold area here. It looks like it wants to move back up in the stochastics, and we had the crossover in the MACD. In the histogram, it looks like it's actually losing a bit of bearish momentum to the downside. So let's just look for, in summary, probably staying in a channel, making a move back up, but it's going to be not a significant move in my opinion, and it probably will come into a channel of sorts. There's enough fundamental headwinds going forward that I can certainly see this breaking down below this area. It's more apt to do that than come back up. Okay, I appreciate you spending some time with me here today. I would encourage you to be hedged. If you're going to hang on to stock, you probably want to consider hedging it. Make sure that your position sizing is prudent and you have some diversification. And with that, I wish you a good weekend and a good week of trading next week, and look forward to talking to you next week. This is Mark Espy.